Is the dollar vulnerable as we head into the G7? Because we have seen some weakness this week.
So it's a very different kind of situation, I think, to the past bouts of protectionism. In the past, when we saw it back in the 2000s, it was quite limited. You know, nobody ever really feared that we were going to see a full-blown trade war between the US and China. This week, I wouldn't say it was so much about trade protectionism as it was about the good news on the other side of the story. So we had, you know, a lot of comments from ECB officials. We had some very good data out of the UK. You know, I think a lot of people have come into June hoping that May is behind them. They can go back to their dollar bearish trades. I'm less convinced, but for now it's a great theme to run with.
If either of you, Bhanu, let me go to you on this. I think it's important. And UBS, have you synthesized yet what these tariffs mean to GDP within Europe? I understand that's an impossible task, but have you taken a guesstimate?
Yes, we have. So if you look at the amount of exports in Europe and you look at how much this is going to hit, the numbers are of the order of magnitude of 0.01 to 0.03%. So this is clearly not just in a sort of static analysis sense, meaningful. But Tom, that is not the point at all, because what this does is actually it reduces business confidence globally. If it douses animal spirits, that's the channel through which you're likely to see growth being impacted. That's the channel through which you're likely to see capex, which is in a nascent stage of recovery, be impacted. So the actual impact on GDP, the actual impact on the markets is going to be significantly higher than the sort of second decimal place points that we're going to look at, just the amount of tax moves or the amount of inflation moves. I don't think that's going to be quite relevant. That PMIs are coming off from sort of 95 percentile of their distribution to close to median of their distribution. The risk is that they go much lower from here and the global cycle cools off. So I think it's not the direct impact, it's the impact through business confidence that we should be looking at.
So Bhanu, to pick up on your last point, is the global synchronized recovery at risk? Or is it only if we get a full-blown trade war?
So to be clear, the synchronized recovery was a 2017 phenomenon, right? Through the course of this year, you've actually seen a little bit of desynchronization. Europe has been coming lower. Asia, for the most part, has held up better. China has held up better. The US has very clearly taken the leadership in terms of the growth. And that's what we are seeing in the markets. That's one of the reasons why the dollar has been on the front foot. If you look at a very long-term chart, and FX is a funny asset class, but if there's one thing that drives the dollar over decades, it is the difference in growth between the rest of the world and the US. And in 2016, this cycle began in China. All cycles since 2009 have been fathered by China. And since then, the leadership has shifted away from China, Europe, towards the US, and that's why the dollar has been on a run. And I think there's still time yet for the dollar to rally.